Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, March the 24th, 2026. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview. Wave 1 is done. Working on wave 2 down. We've been questioning this for the last multiple months. Is this the end, or do we continue to go lower? And go back several months ago, we talked about these lows didn't look quite being the end where to go break out. We kind of chopped, made a new lower low. The next time we had a lot of overlapping, chopping, grinding price action that still didn't look like it was done. We got another new low. Now we're in the midst of this right now. We're still at a lower high off this monthly chart. So as long as we stay at that lower high, there's no way this can be obviously the low until we go breaking out. And then we got some critical levels up here around that 104 to 107 level, which is critical in order for us to break above that. Then it kind of sets the tone we're breaking out. But for now, I still question whether this low currently is the low and we are breaking out, or do we get another push lower? So let's jump into the charting platform, and we can see we just kind of grinding. We're stuck between major resistance, which we've tested multiple times. And even though we tested them, we still made new lows. So is this indicative of testing it again and yet still making another low? Still leaning more this direction than breaking out at the moment. But until price proves otherwise, we just have to take it one day at a time. So this upper quadrant is major resistance, this whole pink box. We've been kind of grinding in it, and we're still above the Magic Fibo. So last few weeks, after we grind it up here, we talked about, well, key sign would be we start breaking back below the Magic Fibo. That would be a bearish scenario that's saying a little warm and fuzzy, we're going lower. Let me get my arrows going. So this move up is somewhat overlapping where we kind of moved up, we retrace, move up, didn't quite make highs, just chopped in that zone, overlap with this, went up, pull back. So you can see we're still seeing some of the similar type of behavior. And the initial move up, pull back. This next run kind of bogged down here and then consolidated for a few days in that same area. Then we move up, kind of pull back, rallied again, pull back, overlap between these areas. So we've talked about this similar as our previous swing point low over here. We'd get a move up, a pullback, a continuation, and then we pull back to overlap. Push up, pull back, overlap. Push up, pull back, overlap. So it's kind of doing the same thing. Push up, pull back, overlap. Push up, pull back, overlap. So we're getting similar type of moves. So does that mean we ultimately going to break back down a new low? That's why it's still on the table, because typically this does not look like an ending reversal where we're ready to go breaking out. Price got to prove something. A, we got to get above this prior resistance zone. B, we hit the 102, which where the big short is sitting. I think it'll squeeze us in a short squeeze up toward that 104 to 107 level. But that's the critical zone from the prior high down to this low. Up here, when the dollar rallied here, this is a massive short squeeze going into last year. And they would push up, rally, they'd double down and sell more, and bounce, double down, sell more. And they started making a little money pushing lower, but now we got all these shorts protecting that 102 up here. So that's where the pain would start to feel if we can bop the plus 102 and close above, say, on a daily time frame and a daily candle, not a wick. Then I think you'll see the short squeeze kick in and push price up toward that 104 to 107 level. But this big pink box is major compared to this one. This one is just where we tested the last several months. We did a little retracement, three-wave. We stopped there. We made a new low. We grinded, overlap, kind of stopped there twice. We made a new low. We grinded yet again, same place. So is this indicative of reaching this area? Low. Reaching that area? New low. Reaching that area third time? New low. Or are we going to break? But even if we get up here, that's just a 618 retracement from the high down to the low. There's that 618 right around that 104 and a half, 105 area. So is it possible we could hit the short squeeze, get pushed toward this big pink box, get rejected out of it, and still make a lower low? Yeah. So before you say, well, this is definitely the bottom, look, we rallied up this far, and if we hit 102 and squeeze up a here, this is the critical point to watch, that 105 to 107 level. Because if we break above that, then I would say, yeah, fait accompli, we are going to go and make some new highs. But without it, we're still in resistance. And if we can't hold the magic Fibo, that starts to set the tone for more downside. We break this little support box, which is green right here. It sets the tone 70 plus 5%, 70 plus 75%. We're making new lower low. That's where this box is sitting for us to go new lower low. So any questions? We're stuck. We've been that way for months, right? Well, you can go back way back into last year. So you can say we're almost going on a year since we got this low. We've just been chopping in a zone. We did get a lower low, but we're still at the same levels on the upside. So we basically haven't gone anywhere with the dollar index for a year, almost a year anyway. Just kind of chopping in this zone. And this can continue. There's no rule to say, well, in order for us to, we have to move lower, we have to go breaking out. We've been stuck here for the last few weeks. Kind of made it to the magic Fibo, and we grinded in this zone for multiple days before we did one more pop to hit the next resistance zone. So this is where this pink box comes from. Prior resistance zones that we've tested over the weeks and months, same zones. Notice that to here, 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 here. It's just the same zone. So, Mr. Tucson, we can't say the probability we could definitely go breaking out is extremely high. We're above the magic Fibo. Well, that is somewhat bullish. We're still in a downtrend, and this price action is still suspect because of this overlapping scenario. You go up, you pull back, you kind of overlap. Then you go up, you pull back with this push higher and this push lower, overlap again. That's typically not what you see in a reversal. You typically see a 5-wave up where your 5-wave is impulsive. A 1, 2, 3, 4, 5. Then you get a 3-wave correction, then another 1, 2, 3, 4, 5. And the key is your wave 1 top and your wave 4 correction can never overlap like we did in multiples here. If this is a 1, 2, 3, 4, 5, that overlap. So it didn't work out. I didn't like this price action coming down where this low ended up in a 3-wave move. That's typically not the way that ends. If it's a big A, B, C type where you're going to get a big reversal, the C wave is typically 5 waves down. This is 3 waves. So it just doesn't look right. Is it possible that it could be the end and we ultimately go breaking out? Yes, it is possible, but the probability with us bogging down in this area still lends to a lower low to kind of clean up all this overlapping mess. And each time we said that, when you get a new low, that could be the end, but why wasn't this the end? Well, we moved up, we went up, overlap, up, overlap, up, overlap, just over and over and over. And we ultimately made a new low. This one looks similar again, up, retrace. You typically don't see, if this is a 1-2, you don't see a wave 3 just kind of bogged down for multiple days at a resistance level. Then we pop and we kind of bog down and we pop. Now we're still overlapping on this scenario. Move up, retrace, overlap, move up, retrace, overlap. So if it's anything like that, we ultimately will get a new lower low. So what's the signs I'm right? And this will ultimately start breaking down. A, we got to close below this Magic Fibo. Magic Fibo is a critical component. It's one of the key indicators of our software, as well as the hook and the cross, the PAI, and the trend momentums. We'll show you that in a second. But this is a critical component. If we start closing below it, it sets the tone. We're probably going to go retrace toward that 618. What is that 618? From the prior low up to the current high, that's the 618 retracement zone. So if we start closing below the Magic Fibo on a daily candle, not a wick, but a candle body, basically taking out these little levels here where we chop to, we close below that candle body, it says high probability we're going to go and start retracing toward this 97.5. If we start closing below 97.5 / 96.5, that's this green box, we close below that, it's over, highest probability, we're going lower low. We've seen that play out over and over on all these where we question the price action that said, well, we still need a new lower low to clean this up. After we cleaned it up, made a new lower low, we got the overlap. So we got, again, a new lower low. Well, that could potentially clean this mess up and look for this to go breaking out. But this price action is still suspect until, obviously, price proves otherwise. So, ladies and gentlemen, I would not be loading up on longs of the dollar index right now because we're slammed down by this huge resistance zone. We've been that way for about a year, where we just haven't been unable to break out of that. And I necessarily wouldn't load the boat on the short side because we're stuck right now above the Magic Fibo, which is a little bit more bullish than bearish, but we're stuck. This is the first level of support. The next level of support is this green box. If the Magic Fibo fails, likely going to come test the green box. That fails. Bottom line is we're going lower low. Then we get new lower low. Then what? We reassess. And we say, okay, now that it's this new lower low, let's see what type of price action starts to move. And if it continues this overlapping or three-wave type correction to make a lower low, this definitely made more than a three-wave. It was overlapping, but it still suggested lower low. And this certainly rallied decently from this low to that high. That's a nice little rally from the 95 up to 100 level. That's, well, 5 points-ish, just under 5 points. That's a decent rally, but still looks suspect about, well, this is the end and we're going breaking out. But I would be remiss to tell you that at some point, this is the bigger picture right here. We're expecting this wave 2 to end. Pay me now or pay me later somewhere in this area. So I do think this is going to reverse at some point to go breaking new highs. Is it here? Less likely. Just like I said when it was there, I said I don't think so. It'd make a new low. We did. That one I said the same thing. We made a new low. This one is still suspect. We do have these lower highs off that monthly chart. which is still suspect to lower low. And then the question is this next lower low going to be the end? Or do we keep chopping and grinding toward our original target we talked about 3.5 years ago? From this low here to this rally, we talked about this retracement in a wave 2. And we said that 3+ years ago, we were going to make a decent style retracement, kind of targeting more of a deeper retracement than a shallow retracement. So far, we've reached just over 38.2. That's not really a deep retracement I was looking for. Could it be the end? It's possible, but still based on price action, lower probability. So maybe we need to do this 50% retrace. Maybe we come down this 93, 92 area, and that's the end. Or we go a little further and do a 618, and that's the end. But at some point, I'd be remiss if I didn't tell you, the plan is for wave 2 to end and go breaking out. Now, the dollar is expected to go ripping, and it's going to take years, but head up to somewhere around that 130 area. So blow past 115 and another 15 points above that. Somewhere between that, say 120 and 140. So I'm going to round it off about 130, which is significantly higher. So that's what the 1-2 is designating. And at some point, the 2 is going to end and we will go breaking out. This was never for us to go breaking new lows, right? That was not on the cards where we'd go breaking new lows. We're simply getting a retracement before continuation, making new highs. So you can see where my target is on this charting platform. The target for this to go is way up here in the stratosphere for this 130 to maybe 140 area. I do think if you go like to a weekly to show this in perspective, that we're going to make new highs. There's the 114 and change that we've been coming off of. And this is part of that 1-2. We're going up higher. But the question is, at what point does this end? And again, I'm not convinced it's over. So if you take the big view, you can see the dollar has been up at that 120 before. And I suspect once this correction is over, this 1-2 is finally over, wherever the bottom is going to end up, we are going to go breaking out, and we're ultimately going to go breaking above 120, heading towards 130, 140. I don't necessarily think we're going to go breaking all-time highs like we did back in the mid-80s. I don't think we're going that high, but this is a high probability target. Why am I telling you this? Because the dollar index is made up of a basket of currencies, and within that basket, the euro dollar is the most predominant. But if you know where the dollar index is headed, you know where a lot of asset classes are going, not just Forex. It affects many other markets. So this is why we spend so much time on it, as you well know. So we're definitely going here, in my humble opinion. The question is, when does this correction over before we start breaking out and coming back down to current price action? I'm not convinced that this new low that we got back in January is the end, because this price action is still suspect and this behavior is still suspect. And when you go simply to just look at this monthly view, you can see on this chart, these rallies are still making lower highs. We get the push, we rally, we get a lower high. We push lower, we get a rally, we get a lower high. We push to another low, we rally, we're still at lower highs. So until that changes, no reason to believe we won't end up with a lower high, lower low, and this continues. Because that's the big view on the monthly chart. Got it? So this rejection wick is not typical of a bullish sign. When you get these big hammers, like we had one of those, and what happened? We went considerably lower before we reversed. And you say, well, we got a little rejection wick here to the upside. Yes, And each time we made lower lows, we kind of did that. And we still at lower highs. So even though we're keep this grind, maybe we need this last push. Maybe this is consolidation. We get another push, then it ends. But like I'm telling you, you typically look for a very bullish reversal. Like this one, for example, we had a beautiful 1, 2, 3, 4, 5. It was very impulsive. And that's why we went breaking out. These other ones, this was corrective. You can go back in our archives. Many years ago, I talked about this wave 3, looking for a wave 4 correction. And the reason this didn't look complete, because this looked like a 5-wave down, perfect little 5-wave down. And I said, even though this bounced and this went right at making a higher high, double top type of move, I made bold statements as this thing was bouncing, expecting it. This is not the one that's going to go breaking out. I think it's part of that B wave expanded flat correction. And we're going to come back down into the area of wave A, and then we're going to go ripping to this 114. We kind of gave a target of 115, 120. And we said that years in advance, like I'm doing now. That 130, 140 is going to be years in advance. As I told you, this correction down, which was supposed to be pretty substantial, is going to be years to take place. It's over 3.5 years, and we're still grinding. So this is big picture. But knowing big picture lets me to plan and execute for future moves. So in closing, dollar index is still in a chop zone. This is not the time to load up going long, not necessarily the time to load up going short, because we're stuck between support and resistance. This big orange line we call the Magic Fibo line is a beautiful indicator that helps, because you can see it acts as resistance, and on uptrends, this is in the downtrend, but on uptrends, it acts as support as it grinds. So why do you put it here? Because I said so. Anything else? Why do you even ask? I'm just kidding. But we're stuck between resistance, support. So what's my level of support? The Magic Fibo. We close below that with a candle body. Highest probability, we're going to go test this green box. We can't hold the green box and go breaking out. We come down, we close below, we're going lower low. That's simple. So a couple of support zones to watch, major resistance zone. And what's the major resistance zone on the upside? That 104 to 107 level. 104 to 106, right there. 104 and change to 107. What is that? From the bigger move, it is our high, low, 618, 786 zone. So if this is the reversal we're looking for to start breaking out to move toward that 130 target, which again should take years, we got to get above this big pink box. I kind of drew it forever on this chart because it's a support zone that goes back many moons. As you can see, it's dictated price action for going back into the 80s and 70s. I mean, check that out. Goes way back. That's why it's stretched so far. Just we're showing that this is a critical zone. Once we get back above it, we should go on to make new highs, which would be this high. And I'm saying we're going to break new highs above that 120 and start heading somewhere in that 130 to 140 area. But the question is this over? So that's where we stand. We're going here. This is the correction of this move towards that target. So we've been grinding higher. The question is, at what point do we end to continue this thing? And no, I don't think once we just start breaking this new high, this is going to be a nonstop flight straight up. You're always going to stair step your way toward that zone, and you are going to get pullbacks along the way to get up there, but that is the plan to get up to that target. So that leaves us with, okay, if we're going to that big bubble up there, at what point do we end and start marching higher? I'm just not convinced this latest low is the end because of the reasons we just discussed. A lot of overlapping price action. The last move of this was in 3 waves, which does not look normal to be the end. And then since that low, we're getting this overlap and we're bogging down at the same resistance zones. So force price to prove it. We start closing below the Magic Fibo, expect we're going to drop about 2 points to come and test that 97 to 96 range. We close below this green box area, we're going lower low. Otherwise, we break above this high, which we had been unable to do for about a year, almost, right? Kind of bring this back and show you. We've been unable to break this area, even when we did back in May of 25. So we barely went slightly above it to just reverse right back down. So there's major resistance ahead. And until price breaks above, I'm throwing this out, there's a big short squeeze at 102. So we close above 102, expect this thing to go ripping, probably somewhere in 2 to 3 point range at least as it rips higher. But then that's that big resistance zone that make or break. So is it possible, ladies and gentlemen, that we could keep this grind and go and finally get up here, hit the short squeeze, go ripping into the zone and still get rejected and make a new low? Absolutely. So this is not the conducive to say we get to this pink box, then it's over, stick a fork in that low, and this is where we go breaking out and start heading to 130. Possibly. But if we just get up here, get rejected, and then we start coming back down below this Magic Fibo, it sets the tone we're going lower low anyway. So how do I know? Well, you can run a 2-point tool. You can go from the low, you can go up to the high where, say, we grind up into midway of that pink box. And if we get rejected out of this, and then we start coming down below the 618 of that move, got a low, you got a high, you get a 618 out of that retracement, then it sets the tone, we're going lower low anyway. So I know there's nothing but lines on here, but let me just show you what that would look like. I'll take a lot of these off and give you a clear picture of that. What are we talking about? And once we do that, here's these prior lows, etc. we've been watching. But you do the same and just do a 2.2 and say, well, if this is the low and we grind up and we hit the short squeeze at 102 and this thing rips up into this box, and I'll just kind of put it midway, it gets rejected. And then we start coming back below, I kind of said right around the Magic Fibo. Well, it's close to the Magic Fibo. And if we grind higher to this point, this Magic Fibo will start sloping upwards a little bit. So we'll probably have an intersection where if you come back down and break the 618, which would be below the Magic Fibo, it sets the tone, you're going lower low. And notice, even with this mark here to that high, it's looking for what? Look at these levels. Right at my zone here. So this thing could still rally up here, fail, come back down, break the 618, giving me 75% chance we're going to 94, 70+% chance we're going to 92.80. And that's where I originally looked for this move lower to go. And that's why I'm not convinced that this bottom is the end and we're ready to go breaking out. All right. So what does that mean for the euro dollar, pound dollar, etc.? Expect the same chop. The dollar kind of topped out, it's chopping. The euro bottomed and it's chopping. Inverse relationship. What I was saying earlier, dollar index is made up of a basket of currencies. Most predominant currency in that basket is the euro dollar. So it is inverse relationship. So here's the software. When you look at it, we got a weekly getting oversold. This is setting up for a big potential for the euro to start bouncing and running. We're getting a weekly oversold. We got our PAI, got our trend momentum. Sure, this could grind a little bit more another week, maybe this week and the next week, start in April. But once we started getting a PAI hook and a trend momentum cross, like we did there, beautiful trigger higher, baby went ripping. We took that trade from this 102, did some targets, the 1448, 1272 extensions, and we hit them beautifully. Remember that? We go back months on that, but we did the same thing looking at that extension. From that pullback, we broke the 618, which was right around this Magic Fibo. We went up to each the 1448, 1272, and even hit the 1618 extension. So I expected this pullback. Now, is this a pullback to go higher? Well, the weekly's getting oversold. I'm looking for an opportunity for this baby to go ripping higher. We talked about nibbling when the daily reversed. And we're back at it. The daily started reversing in a position of authority, looking for this thing to go higher. Is it over? Well, if the dollar goes breaking out, this thing is going to go breaking down. If the dollar goes breaking down, this thing is going to continue to breaking higher. So just like the dollar's got to close below the Magic Fibo, the euro being inverse has to close above the Magic Fibo. Then it sets the tone when you come over here to the trading platform, a charting platform, that we need to see a break above this level. So I'm going to zoom in on for you. And we got this recent high to this low. If this is the low for now, then when do we start getting a little bullish? From that high to this low, we need to break above the 618786. That's what these pink boxes are for. So A, the euro closes a candle body, not a wick, but a candle body on the daily chart above the Magic Fibo. That's bullish. Just like if the dollar index closes below the Magic Fibo, it's bearish. So I would expect price then to rally toward this resistance zone. And if the euro does that, expect it to go up here. Now, if we start closing above this pink box, then it sets the tone. We're going higher high. And we have our extensions up here, 121, 122.50, 124.80. Onward and upward we go. First things first, we got to close above this Magic Fibo. We do that, then we're going to go test this 118, 119 area. We close above that, we're going higher high. And this is why I say that low on the dollar index, I'm not convinced it's the final low. Just like this high on the euro, I'm not convinced it's the final high. But again, the same thing is that I'd be remiss to tell you that based on this euro projection, this was never a reversal to go breaking out all-time highs. It is simply a retracement, just like the dollar index. The question is, I'm looking for basically this A to go up into a B and then come back down in a C and make lower lows. Well, that's the inverse of the dollar. The dollar has a 1, we're in a retracement 2, and we're looking to go breaking out. So when the dollar goes breaking out, heading toward 130 is the target, what do you think this thing's going to do? It's going to break below this 95 and head down to the 0.80s, maybe even 0.70s, maybe 0.60. We'll see. Depends how high the dollar goes, how high or how low the euro is going to go. Inverse relationship. So the question is, was this the high and is this the A? And we need to move this B down here because it's over and we're ready to go breaking lower. Possibly, but still unlikely at this point. So that's why I'm not convinced that that's the high as on the dollar index. I wasn't convinced that low, that 95 area was the low for the dollar index. I'll show you what that looks like just on this chart. Here's the dollar index. I'm not convinced that this low is the end. Those of you that use Ichimoku, we use all sorts of tools. And the main tool is the software, Magic Fibo, and Ichimoku's in this. Anybody trades Ichimoku knows anytime you're below the cloud and in the cloud, this is indecision. Below the cloud is bearish. When you're in the cloud, it's indecision. When you're above the cloud and start to break above it, whether it's pink or green, doesn't really matter. When you start breaking above the cloud, you get very bullish. When you start breaking below the cloud, you start getting bearish. And we're still below and at the cloud. So look at the weekly. It's getting overbought, ready to turn back down. That's conducive to further downside, right? We're below the Magic Fibo on a weekly. That's bearish. We're in the cloud and a weekly's getting overbought, ready to turn over. So this is why I'm not convinced that this thing is ready to go breaking out. More likely it's going to go breaking new low. And we got all sorts of tools saying the same thing. The software, Ichimoku Cloud, we're below the Magic Fibo. Price action is suspect for a bottom reversal at this point. So still looking for lower low, I think is the way it's going to plan out. But all that tells us is all we got to do is look for price to prove intentions. And again, breaking below the Magic Fibo says we're going to go test this green box. We break below this green box, says highest probability, we're going lower low and we're going bubble hunt. So I may need to end up moving this because this could take some more time ultimately to do it, but I'll push it further out and say, are we going to break down and get here sooner, or is this going to chop for a while and do it? We shall see. But again, this is not a time to go long on this, not necessarily a time to go short. We break this, definitely go short to these targets down here. We get above 102, definitely go long and look for it to go test this big resistance zone. We close below the Magic Fibo, highest probability we're going to test the green box. But that's the exact same we're looking for the euro dollar in inverse relationship. We close above the Magic Fibo, we should go testing the pink box. We close above this pink box, we should go to these extensions. And there you have it. Pound dollar's in the same boat. Is this the low we're bouncing off of? Well, we need to close above this Magic Fibo. Then once we finally break this prior high, because this is the zone we tested, failed, tested, couldn't do it, tested, couldn't do it, kind of just chopping right now. So if we can close above the swing point right here, it sets the tone we're going where? Pink box. We close above that, it sets the tone we're going higher high, 139.50, 140.30, new high. So we're stuck. We're stuck between support, we got resistance, and we're just kind of chopping right now. Magic Fibo is right there, and you can see we're struggling. Even the day we looked like we were going to close above, we went right back to it, and it's still struggling. So until price proves otherwise, the bias is, yes, we're going to start going higher more than lower, but we should chop. So if you're a scalper, get in, get out. This is not the time to just get in a position and hold unless you got longer term plans for something higher, but this is going to chop. Expect more of the same. And the software is kind of getting ready for a big weekly recycle on this. Here's the daily, kind of chopping and grinding, engage, disengage. My weekly's just kind of biding time to finish that cycle. So is it possible we could chop a little bit more? Or maybe we get one last little push and then we get a weekly cycle going up. The euro's already there, the pound's almost there. And typically they're like pairs because the dollar is in the same position, whether you got the euro dollar or pound dollar, our dollar is in the same position. So they typically move in like directions, which is when the dollar index goes down, this weakens, these go higher. Got it? Inverse relationship. So is this the bottom? Maybe. I mean, the daily's already started to reverse. We're chopping and grinding. We're at a higher low. So we don't have to go making new lows. And this weekly can just turn and start going up. But that's what I'm looking for. Like we did over here. We got toward oversold. This part didn't quite get all the way, kind of about where we are now. and this baby went turning up, and we started chopping, and then we did another cycle, and then boom. This is part of that 3+ years ago when we were way down here at 103. I made a bold statement. It's time to go long the pound dollar, because it's going to go up thousands of pips in this correction. And then once it's over, we are going to go back down and make lower low. When's that happen? When the dollar finishes its correction, this is going to finish its up move, and the dollar starts ripping higher and breaks toward that 130 target. This baby's going to come tumbling back down and break a new low. Amen. So these thousands of pips we've been gathering over the last few years, and these pullbacks pegged them kind of along the way. I'm still not convinced that's the high that we're going to end on. We're probably still got some more upside, but eventually it is going to end, and eventually we're going to come make a new low. And when does that happen? When the dollar reverses and goes breaking out, moves towards 130, this pound is going to come way back down, thousands of pips lower, into the parity and below scenario. All right, there you have it. Let's finish up with this and move on to the markets. Euro yen, pound yen. Still not convinced these things are ready to go breaking out. Still think we need a new lower low. This looks three-wave, but since that three-wave, we're overlapping and chopping, not conducive to breakout at this point. Plus the software has a monthly overbought, a weekly scenario. So we got lower highs. That's still not conducive to a breakout. This looks like we need another flush. And this appears to be the initial wave down. That's like an A. And this is a shorter term. That's the A. And this overlapping chopping is the B. Maybe it pops a little bit more into this zone, but we get a B. And then we come back down in C. So I'm expecting this to at least start coming back down toward the Magic Fibo in this daily chart. Pound yen, similar situation. This looked from this recent move up. This looks 5-wave down. This looks 3-wave corrective. And we got same type of thing. We're chopping in a 618, 786 zone. We're testing it. It's still likely we need a lower low. So again, those of you like A, Bs, and Cs, this looks like an A wave. This overlapping chopping, it looks like the B wave. And we should come down in a C wave. Well, if that's enough to excite you, we're talking somewhere around 705 to 600 right now points to get down that Magic Fibo. We're at 212 to 206, 212 to 207. That's this Magic Fibo's level. So you're talking about 500 to 600 pips just to get down to the Magic Fibo. What's the likelihood we go breaking out? Lower probability than the likelihood we go breaking down. And if that doesn't excite you enough for 500 to 600 pips, what about something more appealing? In this bigger move was this guy here, 2,700 pip decline for the carry trade unwind that happened in 2024. Then we got all this chopping and overlapping. So on a bigger scale, this looks like the A. All this chopping, even with this grind, looks like an expanded flat B. And we're due for a 1, 2, 3, 4, 5 coming down in a C, which would put us thousands of pips lower. You're talking in the neighborhood of 3,200 pips from 212, 1,200 pips to get to that, and another 2,000 pips to get to 180. So there you have it. Why am I more bearish than bullish on these pairs? Because the software is telling us we need a pullback. So we can come over here. I believe I have it in this chart here. We have the daily just kind of grinding back toward overbought. We have a weekly that's been turning over and is starting to slingshot back up. But the bias is, as I said a few weeks back, I expected this bounce as the daily reversed, but this is likely going to turn and hook down. Blue will turn and hook down. Green's going to turn and hook down. And since that slingshot up, what happens when you disengage? We call that engage, disengage. we go back to the low and make a new low. So that's part of that small A, B, C. And if we get the bigger picture, this much bigger move with all this corrective action, we should come back toward this low and make a new low, which puts us way out in the stratosphere. But look at the software lining up. At a monthly overbought, weekly was overbought, turning around, still likely going to cycle. And our daily is just simply cycling back up after that bigger move. And we're a three-wave correction, finishing that up and looking for this to turn back down. So when's a good time to short this? When this daily finishes, as is grinding right now, when that PAI hooks, trend momentum crosses, hook, cross, slope angle separation, bingo. Happens all the time. And we're looking for it yet again in a B, C type of correction. Make several hundred pips to start. And if it is that much bigger one where we're talking about going down to that 180, 185, 180 zone, then you're talking thousands of pips. Is it going to be hundreds or is it going to be thousands? And then I'll leave you with this on that big picture. What happens when a market crashes? We get a financial crisis of any type. What does this pound yen pair do? Crashes, right? The yen strengthens and the pound yen crashes with the markets. And we'll show you this going back in time, and I'll consolidate this. But back in the dot-com bubble burst, went down about 9,000 pips. Grinded up into the 2007 financial crisis. We then went down over 13,500 pips. So what's lingering? The next financial crisis. Pay me now, pay me later. Yes, I think our markets are going to go bubble hunting and all-time highs still to come, but then we're going to get a massive correction. Maybe it's the commercial real estate, 5 trillion in counting, that bubble bursts, or it's bankruptcies, got so much credit card debt out there and other things like that. Could be anything, could be another war, could be who knows what it is, but it's coming. And when it does, expect this piece is going to go way down. Is it going to go 9,000? Is it going to go 13,000? Does it split the difference and do 11,000? But this 180 target is a drop in the bucket compared to where it would likely go to, because moving down to that's only like 3,000 pips. And if that'd be a triple to get to 9 and almost a quadruple to get to that one. So we're talking massive numbers lower. Let's go back to COVID in 2020. What did I say? This is the perfect time to go long the pound yen. We're going to have a carry trade unwinding, and this baby is going to go up somewhere between 8 and 10,000 pips over the next several years to go break this high, just like the dollar is right now. I think the dollar, once that correction is over, we're going to go breaking that high, which is around that 120, and that's going to give us that 130, 140 target. I digress looking at this, but it's the same point. This was not a prediction. That's for the profits. Everybody predicts everything. Predict this, predict that. My predictions. I never predict. I leave that to the prophets. I anticipate with the best of them. But here you go. This is ultimately going to come down in a correction and could be even the next financial crisis stems this on. And it starts with the smaller correction and ends with the big financial crisis. But expect the yen will strengthen when the markets are plummeting. Fair enough? All righty. And history has shown us that. So we would expect it again, even back with the dot-com bubble burst. There you go. All righty. Let's continue. What about ES? What are our markets going to do? We're due for this correction we've been talking about. And let me go to a daily chart, kind of get this into perspective. And this was part of the process, Emil. How long have we talked about, we really need a new low to fix this? Well, we got it. Is this the end? And this could be where we're ready to go breaking out, or do we just kind of chop and get one more push deeper? I really wanted to see a little bit deeper retracement to hit our targets down here, but this meets the criteria of this chopping overlapping price action. In order to clean that up, we needed a new low. Now the question is this going to be part of a retracement to go higher, or we need one more flush to go deeper? And the deeper this goes on that correction, the higher this can reverse and go to the moon, right? We talked about that. What would that look like? If we can get a weekly style retracement where we just kind of chop and go a little bit lower, and we do a 618 retracement / Magic Fibo bounce, this thing is setting up going into the mid sixes, upper sixes, but this thing could even extrapolate out to 9,000. That is a hell of a run. If we can get this deeper correction off this weekly chart, go visit the weekly Magic Fibo, which again, from that low to the current high is a 618 retracement of that move, combined with the Magic Fibo bounce. We call that a combo meal. That typically, when it plays out, pushes toward a 1618. So we could be down here in the upper 5,000 area. So we drop another several hundred points, and then we go up, 3,000 points? That's pretty impressive. Very impressive. So what's going to happen? Be careful. This is a perfect place for this bounce. We got what we needed. We made a new low. Now we still got to get above the Magic Fibo. That's still bearish. We rallied right into it, got rejected. So I'm not trying to tell you just because we got the low, this is where you need to be, but this is a perfect place for this thing to bounce from, because A, we met the criteria of a new low, and guess what this low and that high has to do? Where did we go and bounce off of currently? A 618. You see it without putting it on the chart? Well, I see it. So you take the 2-point tool, you go from this low, which is basically the one candle, and you go up to the high. That's a 618 retracement. So far, it's holding. So if this support zone holds, which again, this could be the area we bounce from, but this support zone holds, we start getting above the Magic Fibo, we break above this lower high trend line, which is this next big area of resistance, game on, we're going higher high, all-time highs. Is this the beginning of that? Well, remember our seasonality reports. We expected a correction to go down into May, into March, and then we start seeing a rally come around at April, May area, going into fall. That's the plan for us to go bubble hunting. So I don't think this is the end of our markets and we're going into a market crash at this point. I do think we're going to make all-time highs again. And yes, this is what we were looking for the last few weeks. I kept talking about it. So why am I bringing this up? You need to be in a position of authority on this bounce. Between yesterday, the bounce and the pullback, and this hold to 618, we start breaking out. It sets the tone. We're going to test this resistance zone / lower high trend line. We break above that, it's over. We're going all-time high. So a force price to prove itself. And if you did take this bounce, you need to be in a position of authority on this, because yes, we could go lower. And in fact, I'd like to see lower low. I told you why. The lower we pull back, the higher we're going to go on the breakout. But this met the criteria of cleaning up that chart by making a new low. Guess who else did the same thing? Missed the NASDAQ. It actually made a lower low. Sure, I would have preferred this to go lower. But how many times did I say it since that October high here where we made a lower high? all during this period of this bounce and grind, we kept saying it, well, we need a pullback, still need a pullback. In order to clean this up, even that week here, we got this close to a lower low. So that's not enough. Sell rallies in the short term. We're going lower low. The markets are screaming, we're going lower low. We did it. So we got both ES and NASDAQ at a lower low. That could be all we need. You don't have to go to your extensions every time when you're looking at a corrective action. You need lower low to clean it up. Then you can go blasting off. But again, you need to be in a position of authority on this big bounce from the other day. And the reason I'm not convinced that we're definitely going lower low is right now price action's honoring this move. What does that mean? Same thing on the prior one. Off of this new position, we got a couple of areas of resistance we got to break out, but the support, and you go to a lower time frame like a 1 hour, for example, just so you can see what the low was off of this low over here and that high, that yesterday's big bounce based on a tweet. We got a low, we got a high, and where are we holding currently? 618 retracement. Some people think this is just smoke and mirrors. You're talking about Fibonacci and retracement. Well, I have decades of experience knowing that this is not smoke and mirrors. This is critical price action. Yes, we got to get above the magic Fibo. Yes, we basically need to break that prior high we went to. We break and close above that, it sets the tone, we're going higher. In the short term, I would not be shorting this, expecting this to go down because we're holding a 618. This is a perfect area for this to hold and start breaking out. When do I get a lot more bullish? We close above that swing point. Close above that, sets the tone, we're going bullish. Fair enough? But we got what we needed, ladies and gentlemen. How long did I say it during this retrace and grind? Even when this went ripping from this initial move up, retracement going higher, I was like, very suspect. We still got lower highs. This is still corrective, still doesn't look right. We really need a lower low to clean this up. And so far, we got the lower low. Then we get this retracement to a 618. That's the perfect area for this bounce to continue. So should we close above this 24,760 area? And I know what you're thinking. Well, Gary, that's still several more pips higher based on that run up here. Yeah, but it kind of sets the tone. That is the initial retracement and a breakout. So once we break that high, where should we start targeting? The prior highs over here. We break those, then where we go? Big resistance zone up here. And then what are we looking at? Let's go back to the daily. We're looking at some big numbers. I got big bubble hunts going down in all these markets into the fall. So it's going to take some time. But this sets the tone for a much bigger move higher. And even off the most recent move, if this is the end from the recent high down to the low, we have 26.7, 27, 27.9, a couple of targets out there. Kind of that bubble hunt. I was thinking 28 minimum. Well, what if it's the bigger retracement move? If we could get this thing to kind of fizzle manizzle here and go lower, and we set up this low, high, weekly Magic Fibo bounce, which again is a 618 retracement. There it is right there. So this would be the low, that's the high. We get a 618 retracement combined with this weekly Magic Fibo bounce. If it plays out, notice where these numbers are. Up here at like 36,000. Wow. I mean, when you come down to 20,000 and go to 36,000, that would be in the card. That's why I'd love to see lower low. But if this is the end, because again, off a daily chart, that's all we really need to correct this chart enough to warrant a breakout to a new high, then we use the smaller targets, 26.7, 27, and 27.9. Got it? So in closing, is this the end of the correction, or do we need further down? Be in a position of authority on these bounces, or if you're selling, like I told you on the way down, be in a position of authority because there'd be a lot of chopping kind of action. We expected that, and that's what we got. So I would not be shorting here because this low to high, perfect 618 bounce, if we start closing below it, then yeah. If this daily candle closes below this 24,000, then it sets the tone. We go into 23.6, 23.5. Maybe we go down to 23 and search for that next bubble that I was looking for in the first place. But if we can break the high, it kind of sets the tone. Just on this recent bounce here, that's a critical level. We break above that, kind of sets the tone. We're going to go test the next level. And then the next level is this pink box, and it sets the tone. Are we going breaking out to those extensions? Well, then you get the recent high to this recent low. There's that level right there, that pink box. Let me adjust it just a touch because we got a new low. But we start closing above the Magic Fibo and take that swing point out. We're going to go here. We take that out, we're going here. We take that out, we're going here. So is this the end and we're about to get a rally breakout, or do we need another push lower? That's why during this period until it's known, if you're taking short-term trades, be in a position of authority and take some profit. Protect your profits when you have them. Don't just hold them expecting, well, it's going to come back. This thing could go plummeting all the way down to 20,000 and you think it's going breaking out. All I can say is what if we get down here to 20,000 and do that weekly Magic Fibo bounce off the weekly Magic Fibo in a 618 combo? That sets the tone for massive upside, going up to the 36 range. I like it. So I'm not trying to tell you I guarantee it's going to go down here, but I already have a strategy that if it gets anywhere near that low 20s or 20,000 down here, I know what I'm doing, going long big time into the fall and looking for that thing to explode higher. But this is all we need. This could be it. And until price proves otherwise, what? We got to close below this support zone. We close below 24,000. We're going lower low. Otherwise, we got to take that swing point out that we tested just the other day. That would set the tone for a further breakout to the upside. And notice off this little swing point here on this daily chart, the last few days. You'd run these things for days. That high to this low, guess who's sitting right there at that swing point? My 618. So what happens if we close and break that? Where's my targets? 25.4, 25.6. Amen? If not, Harold, we close below 24,000, then what does that mean? We're going lower low. We're going 23.6, 23.5 area, pushing lower. But this could be the low we needed, and now we're holding a 618. We're stuck. Do we break out? Do we break down? And here's your levels. Close below 24,000, short it to go a few hundred points lower. 23.6, 23.5 area. We break above this swing point, then we can go long for several hundred points from, say, 24.7, 24.8, up to 25.4, 25.6. In the interim, you're taking a bounce or you're down a few points on this little push, then be in a position of authority. This thing could go ripping higher, or it could certainly go ripping lower, but that's the zone I'm looking for. We close below this, we go short for that. We close above that, we go long for this. Got it? All righty. In the interim, be in a position of authority, whether you're trading long or short. But that's what I said for weeks. coming into this move, since this last October and that move, we got a lower high. We did not make a new high. That whole time, this chop and grind and stopped at a lower high suggested we need a new lower low. And even as we got this in these bounces, I kept telling you, on these rallies, sell them. 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 So we at least get a lower low while we're there. And we're holding a 618 off of that move. Could be the beginning of the breakout. So we break above, you shoot for your targets, and that would be these up here. We break below this 24, then we go to these shorts down here. Got it? All righty. What about the Russell? Is this the end of the Russell? We got a beautiful move up, retracement into this Magic Fibo / 618786 zone. We're so far holding. Yes, we were lower, but look where we closed, and we're still in the zone. Is it possible we need to flush down here? We don't have to, because this is just a beautiful move up and a 618. If we could start to break above these lower trending high trend line there, right in this area, if this rally can continue and we could break above, say, that 2650 area, sets the tone. We're going toward 3100, 3000, 3100. So what's the likelihood we go up here? Extremely high probability. Could we still go lower and do that? Absolutely. So I'm not convinced we need a new low on this, because this one's been a little bit different. We made new highs coming into this year, all-time highs. And this correction off of that is a beautiful 618786 retracement zone, and so far we're holding. So what's the critical point? We got to get above that level, and right now it's this prior swing point. And if we do that, it sets the tone. We're going to go test the next level, and we get that, sets the tone, we're breaking out. So on this, you can see from where's some potential target. If I use a 3-point tool on this, I'll remove all of this for a moment just to show you what I'm looking at. And we use this recent low to all-time high to this 618786 retracement, and you use a 3-point tool, Mr. Tucson. You go low, high, higher, low. If that's the end, what are we looking at? Can't make the stuff up. Look where this baby's sitting. Right in my Fibo extension zone. And that was before officially this new low came in yesterday. Right? So is this over? We break that high right around that 2570, 2580, maybe 2600. We got that little chop zone right there coming across. So we get above that, sets the tone, we're going higher high. I need to move that down a little bit. Well, we got this zone, former resistance, turn support, 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 back to resistance. So right in this zone, somewhere around that 2600 is why I'm looking at that. Everybody see it? Resistance, 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 support, 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 break back down, resistance. So we flip that back to support. That suggests we're going breaking out to this little box here, which is the next little zone. So you're talking about we close above 2600, we're probably going to make a run toward 2700. That's a big move. Those of you looking at the Russell. And then we break that, we're going up to 29.3, 30, 29.90, 31. So I've been saying that this is likely going to 3,000, 3,100 level, highest of highest probability. The question is, at what point is the correction over and we go up there? Whether we go from here, we're going up there, we go deeper and make a new low, we're going up here, highest probability. Well, most people don't trade the rut. Many ways to do it. Most people trade IWM. Well, it's the same thing with the ETF. Recent low to high, 618786, Magic Fibo bounce. And that leads us where? From the recent high to this low. We start closing above this 260, sets the tone. We're going to 275, 280, 290. What's the bigger picture? We're going up here to that 290, kind of confluence of events. And my target zone has been, based on that, in this neighborhood of 3 to 315 area. That's where I think we're going. The question is this over and we're ready to go, pushing out until the fall now? Or do we need a deeper retracement to set up a much bigger move? And what does that look like? Our weekly. We've been talking about this on every chart. If we can get it, I would love to see it. Low, high, get a 618 retracement, combined with a Magic Fibo bounce. That's why I call it a combo. 618/Magic Fibo, where it hits and bounces. Then it sets the tone. We can go way higher. Way higher. And in that scenario, we're talking 370 up here. That's huge. That's the same one we did with the NASDAQ, talking 36,000. That would put us around 377 on IWM. Big move. Now we're not there. We didn't get this far of a retracement. Is this bounce over? We're ready to go breaking out in the smaller targets? Or are we going to get a deeper retracement and potentially open up much larger targets? So if we were able to do that, where we get a deeper retracement, then it sets up much higher, loftier targets. Now you can see why this is extremely high probability target, right around that 300 to 315 area. Whether we stop here, get there, or we do a deeper retracement, they're both extremely high probability targets, and potentially with this bigger retracement opens up a bigger extension. What about global liquidity? Is this the end of that correction, or do we need to go further? We hit the Magic Fibo we talked about, and are we going to hold it, or do we tend to break out or break down from here? I still think, why do I look at the Nikkei for global liquidity? A lot of people borrow money from Japan when it was negative interest rate, and it's at low interest rates now, considering other places. And then they invest in our more, tech companies, AI, et cetera, and then crypto back in the day when it was very bullish. We're in crypto winter. We'll go over that in a moment. But this scenario, I warned you when we went ripping up that we were due for a deeper retracement, at least toward the Magic Fibo. Are we done? Off of this recent low and this chop, we got a new low. So I'm watching now. Do we chop more or we get a beautiful retracement? Well, notice what the Nikkei is doing, just like the ES, NASDAQ, etc. Off of the most recent low to the rally higher to right there. We got a 618 type of retracement. It held and starting to bounce. Is this conducive to a breakout? Maybe that's all we needed. We got our lower low on the Nikkei. We got our lower low on the ES. We got our lower low on the NASDAQ that we were so desperately looking for. This might be the end, my friends, and we're ready to go breaking out. Amen? So be careful that I would not be shorting this, but we just got to get price to prove itself. We close below this swing point here, we will go lower low. And right now we're holding it from the recent low to high. We're holding that retracement zone, which is conducive to higher highs. Now, the next key component is going to be we got to close above that swing point. We close above that, that opens the door to some extensions. What extensions will we look at? Use a 2.2 off the recent one, just to give you incremental target. That would be like 56, 56.5. If we do what? We start breaking above this high, we're going to go 56, 56.5. I don't necessarily trade the Nikkei. I just use it as a global liquidity barometer to kind of tell us. But when I warned you during this rally, our markets were going to take a dip. Seasonality said we typically take a dip into March. And this price action said we needed this dip. And I warned you that if the Nikkei did dip, it was going to pull our markets down with it. And that's exactly what we saw with ES, NASDAQ, IWM, etc. It did exactly that. Only question, my friends, is this over, Emil, and we're ready to go breaking out? So far, it looks somewhat bullish in the sense that we got a low, we got a high, we're holding a 618786. So let's see where we close today. We close above that swing point, then we can start focusing on these upper targets. We break that, you got the next target. Then it sets up the bigger move. That's on the smaller move. It sets up this bigger swing point high to swing point low. By getting to these targets, we start crossing across the 618. Then it opens the door to potentially 6162. And then last but not least, you go from the biggest swing point high down to the same low. If this is it, then we could go shooting for 64, 65. So incrementally, this is how I come up with different targets I shoot for. And I force price to prove itself. Now, if this intraday candle closes below this low, we go short, shoot for the low side. If we close above, we shoot for the upside. In between, we're in a position of authority, and we're making sure that we're prepared for either one. It could either break out or it could go lower. That's a beautiful deduction, isn't it? Well, with this 618 hold, it suggests we're going higher, but we still got to take that out. We take that out, then you could shoot for a good 1,500 points or so, 1,500 to 2,000 points to go from this right here, 54 up to 56.5, 54.5 to 56.5. Not a bad little move. Otherwise, we sell off and we close below that swing point low. Then we open the targets to the downside. And how do we figure out what the downside targets are? You use a 2.2 from the recent low up to the high. And that shows you this overlap. When I already had one on there. From that low to high shows the 618's holding. But if we close below it, then we have our extensions down here at lower low at 1448, this 1272, maybe this 1618. Got it? I'm going to take one of those off so that we don't redundancy here. Close below that low. What do we target? 52, 50,200, maybe 48.5. We break out 56, 56.5. We take that out, then it starts from this high to low, start getting above that zone right there, which is my 618 on this lower scale. Then it sets the tone maybe 61, 62. And we get up there, then from that high to low, we take this next 618, 786 out. That opens the door even to 64, 65. Where do I think we're ultimately going with the bubble hunting? We're going up. Is this the end of the correction? Maybe. Force price to prove it. There you go. So circle the wagons on ES, NASDAQ, etc. This low was all we needed. We got a new low. That's what we were looking for. And not only did we get it on ES, we got it on NASDAQ as well. So that was the key. The prior moves, when we got these pushes lower, we didn't get a lower low on the NASDAQ. It came awfully close, but we didn't get it. And I warned you that that was this low here on ES, that sell rallies because we're due for a lower low. Ever since we got this overlapping chopping action, even though we did, unlike the NASDAQ, ES did go on all-time highs briefly. This overlapping chopping action said in order to clean this initial move down, to clean this up, we need what? Lower low. So during this period of these lows, I told you, sell rallies in the short term, because until we get that lower low, that would clean the chart up for us to go making higher highs, all-time highs. Is it here? It's in a position to do it. Right, Emil? We got the low, we got the high, we held the 618, we're holding above, we break out, we use the targets. We go up here, we hold that, break the trend line, we're going up here. Pretty simple. But there's timing in here. Well, do I go long now? Do I go short? Well, you can wait. We close above this swing point. We're going up to here. That's about 100 points. And we break that, then it opens the door for a few hundred more points to the upside. NASDAQ, just like I showed you. We start closing above this swing point, sets the tone. We're going to rally toward the next swing point. And that sets this move toward the 25.4, 25.6. We do that, then this bigger move, we're breaking the 618,786 zone. Then it sets the tone 26.7, 27,000, and 27.9. Do I think we're going up there? Absolutely. The question is, do we need a further dip before we get up there or not? But pay me now, pay me later. Whether we get the bigger dip and go, we go from here now, or we get that weekly Magic Fibo combo kind of bounce and really sets the tone. We're going stratosphere. That's the one that excites me the most because it has the potential to rip all the way to 36,000. Now that's some significant movement from 20,000, almost double to get to 36,000. That could never happen. Oh yeah? So I'm not trying to tell you it's definitely going to go down here, but what is the strategy? As we like to call in this class, right, Emil? We get down to that Magic Fibo bounce on a weekly. Salivate country is where that would lead us to for the potential for a massive move higher. Regardless, if this is all we needed, that lower low to clean that chart up, we're going higher high. Pay me now, pay me later. We go lower, we're going higher. We go lower, we're going higher. And if we can get that weekly one, it sets up the biggest higher high of all. But we're definitely going higher high, in my humble opinion. So as we get into the fall, I expect to see all-time highs. And I don't mean we have to wait to fall to get there, but just grinding higher. If we make all-time highs in April or May, I don't think that's going to be the end. I think it's going to push toward the fall, maybe even the end of the year, and we could talk about it. Or what if we way up here at the end of the year? Sell, 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 sell. If we can get a rip like that parabolic move, looking for that big correction to come thereafter, and it might even be the Elizabeth, I'm coming to join you, honey, market crash to follow. But regardless, we do it here and go breaking bubble hunt, or we go deeper, we go bubble hunt. When we get bubble hunt, we definitely need to be looking for another big correction, more than this type of correction here. Okay? All righty. Let's continue. What about Black Gold Texas Tea, the Beverly Hillbillies? I think I got it right there. No, that's Tesla. Let me get my, thought I had it on here. Anyway, we'll just do it manually. Need to be careful with this black gold. Is this the parabolic move and we're ready to go breaking down? Or is this the initial move up and we're consolidating for another push? The key level to watch is this weekly chart. Do we close, and we still have another week till next Tuesday? If we can close from the recent high to low, we can close above this 103 area, sets the tone. We're going 124, 130, maybe 140. That's on the smaller scale. So most recent action, we start closing above that high to low at 103, not a wick up here, but a close above, sets the tone. We're going higher high. Otherwise, is this the psychology of a market cycle and we got the big rip? This thing went parabolic, went from 60 to basically doubled in a matter of weeks. That's huge. We talked about getting a lower low because the chart needed it, except if rockets went flying, this thing would go ripping, and that's what happened. Now what? These extremes, typically we drift back down to the norm, which the resting state for our crude is in the 60s. Wherever we blast off well below it, we overreact and we come back to it. But that's kind of the resting state as of late, around the 60s. So is this the end? And this is part of that psychology of a market cycle like that one. And we ultimately came back down. And this is just another quicker version of that. And we come back down? Maybe. So it's still undecided. I'm not extremely bullish to go way up here. I'm not extremely bearish to come way down here. I'm kind of watching in between because I did expect when we had that big pop, we would get a dramatic drop. And now we're chopping. So is it the psychology of a market cycle right now? Let's go to a daily. A few more price actions in here, some more candles. And this could be the initial rip, a pullback, the chop consolidation zone for the drop. That's why it's critical to watch this resistance zone. If prices can rally and close above that 103 area, sets the tone, we're going higher high, and opens the door to 150. If this thing blasts off, it even potentially sets up an insane move into the 200s. And that's this 3.2. From the COVID low up to the high to the higher low, this thing could set up moving into the 200s. It looks like I got two of these on here. Let me remove one of them. This low, that high, this higher low, that sets up that 250, 270. Insanely could go to 300. There's no way. That's what they said way back when oil hit 130 before. And this thing went to 120 in a matter of a few weeks because of a few rockets. So they continue to blow up some oil fields and production facilities, etc. Easily get up here. But it does kind of alarmingly say that 250 could be in the cards. Or am I trying to tell you do some kind of trade and shoot for the moon up there? Might be a lottery ticket. It's possible, but I'm not convinced that this is ready to go breaking out. That's why I want to see a weekly close above this Fibo level, basically this box. I want to see a close above that 103, not a wick, but a candle body. It sets the tone, we're going higher high. And we incrementally start shooting for what? 124, 130, opens the door to 150. Everybody good? All righty. So what are we doing here? Is this the first move up, correction, and we go higher? Or do we falter and come back down and make a new low? It is a coin toss at the moment. That's why you need to be in a position of authority. So we have until next Tuesday. Do we get a weekly candle body close above this 103? That sets the tone higher high. If we don't, then we have this initial move up, this retracement, and it looks for the next push back down, psychology of a market cycle. There you have it. So any questions on black gold, Texas tea? Not real bullish at this point. We close above 103, I get very bullish. We close below this low, I get bearish. And in between, we're stuck. Chop, chop, chop. So if you're scalping in here, take aggressive profits. Whether you're short, whether you're long, on these type of bounces, be aggressive in taking profit until price proves it wants to go higher, or price proves it wants to come back down to the 60s where drill baby drill lives. We're not going to be at these extremes for long periods. We eventually come back, and this one is a much more abrupt, just that's parabolic. And typically after a psychology of market cycle we've reviewed so many times, that abrupt action warrants another push lower. So I warned you when this was up here, we'd get a decent correction. Now we're stuck between support and resistance. What are we going to do? We break above, we're going higher. We break below, we're going lower. And in between, we're stuck between support and resistance. Be aggressive on whatever you're doing in between. There you have it. Would you take a look at hood? Absolutely checking out the hood. And we got a beautiful initial move up, retracement into the sweet spot. I would actually like to see hood do this 618, 786 type of retracement, get a big Magic Fibo type of bounce, could set up a big move higher into 160, 170, maybe 206. And is this going to hold? Well, I like the support down here protecting our retracement. As long as this 618, sometimes we get an over exaggeration of this move, but it holds, bounce, looking for a move up. I talked about this with our markets moving lower. We'd probably see this move lower. So is this over and we're ready to bounce, or we need to go a little bit more? It'd be a shame on this weekly chart not to see this thing grind just a little bit more to hit that weekly Magic Fibo. But I have no problems at this point as we go ripping into the fall. I think this is going to rip with it as we go into the fall. If you want to wait and you're more conservative, so I already nibbled on not just hood, I bought some hood U down in the zone when we were chopping. And I said, what if I bought some already and this went lower? What would I do? Add to my position. So I'm still looking for hood to go ripping into the fall toward, say, fall, maybe end of the year. We'll reassess this as we get there, but this thing should go ripping. Even if on this hood U, which is a 2x leverage of hood, you can see 2x ETF, even if we just get a simple 618 retracement off of that, we're in the low sevens, and we're talking somewhere around a triple, 23, maybe 28, maybe a quadruple, for us just simply to do a retracement on this. But could set the tone we're breaking out to new highs. That all depends on the underlying, which is hood. And does it go to its extensions? And this is likely going to at least reach this, if not break out itself. So let's look at it on Ninja Trader. How about that? Let's throw the Ninja Trader in here. Hood U. Come over here to hood, throw some software on there, get that out of the way. And in the way of my chart. But again, it's the same picture. So we got a weekly start in the bottom. I like it. Is it over? Could we go lower? I kind of like to see a little dip lower. That would be cool. Come down to the Magic Fibo. You can see the Magic Fibo line right there. Let me stretch that out a little bit so you can see a little bit better. And my weekly. So when's a good time to buy? Well, I already nibbled in this zone because this beautiful pullback interests me. And if we pull back even more, I'm not buying hood per se. I'm buying hood U, ETF version of that, 2x leverage. So when this baby PAI hooks, we're probably going to see a PAI hook trend momentum cross. And more than likely, as we go into the fall, this baby's going to go cycling up. And like I was saying before, Emil, what if we just simply get a 618 retracement off of that? That's still a substantial move higher on this from we're in the mid 60s, could go a little bit lower, maybe down to 60 right in that area. The bottom line I want to hold above is that 55, which who's in the way of that and protecting us? Our big Magic Fibo. And we get that move. You go over here, drawing tools. You go to your Fibonacci retracements, just like I show you in the charting platform. This is a part of your software package. You get the Magic Fibo, you come from the high down to the low. And let's just say we do come touch the Magic Fibo. We get very bullish, but this is right at a double, just simply doing a 618786 retracement. So from that high to the low, we simply get a 618786 type of retracement. You're talking about a double. That's not bad. I'll take a double any day. What am I expecting? What we call that paint the PAI Picasso. And what is it going to do? The software? I'm expecting the weekly to reverse and start cycling back up. And the last time we got a cycle, this baby went ripping from 30 all the way to 150. Well, is that in the cards? Probably. We get a big weekly cycle up. What do we know about a weekly cycle? Takes about 2 to 5 months to cycle on average. So where would 2 to 5 months put us? So around that fall period. And if we do this engage, disengage type scenario on the way up, it take even longer. So this is why I'm looking for this weekly cycle to go ripping higher into the fall. And even if price goes to 618 retracement, 786 zone, you're talking about a double. And if we get above that zone, then it sets to the extensions up higher in the food chain, which puts us up around 160, 170, maybe 200. And we're in the 60s. That's a triple. Not bad. And we're about to get a big boost here coming soon with a weekly PAI hook. Amen? All righty. So is this the end? Maybe. Our markets start ripping higher. The tide will raise all boats. And if NASDAQ goes breaking out all-time highs, ES goes breaking out all-time highs, Dow goes breaking all-time highs, Nikkei does the same, all markets, Russell, everybody does it. What is this thing likely to do? Start ripping. So I'm willing to take the risk by owning some shares, which I already own, of Hodu. And we're down here at $7. Again, you do the same thing. You do your drawing tools. When you install the software, you got the MP right there, Fibonacci retracement. And from the all-time high of this ETF down to the low, and if we go a few dollars lower, since I already own some in this area, what am I going to do? Add to my position, dollar cost average. Then once this thing reverses, maybe we go a little bit lower, 630, 620, something like that. If we push a little bit lower, at whatever point, we simply get a retracement back toward a 618. Man, that's a quadruple from $6 to 24. We push the envelope toward the 786, and it's simply one of these type of retracement zones. That's a thing of beauty. What if we go ripping higher and reach those extensions and this baby blasts through this? Then it opens the door to some extensions further up the food chain, 39, 43. Could it go insane and get up to 53? Would have to be pushing 200 plus on the hood, which is that same extension up here, 200 plus. Then it would typically mean this hood use should probably be somewhere around these 1448, 1272. Because of this dramatic kill to the downside, sometimes you get the underlying make all-time highs or new highs, and then this product doesn't quite go as high. Either way, I'd be thrilled just to get to this 24 to 29 zone. And that's why I own shares of this, because I think it is a coming, and it is a coming in a big way. And even if the big way is a dud and we only get to the $24, $24 to $30 range, and you think that's not so exciting, well, that's right there is at least a triple. And if we do get the blast off, this thing could turn into a quadruple or more. Amen. And the software warrants this. Here, look at this. That's the daily back in oversold territory. And we don't have a whole lot of data on this because it's a new ETF, but the weekly, we don't even have data for it. But if the data was there, you'd see the weekly oversold just like the underlying. So in a case like this, what do? Well, it's a new entity, but it's based on the underlying. So we use the software on the underlying to dictate the same thing on the ETF. Got it? So that's what I'm picturing right now. The weekly is deeply oversold. We don't have data to show it, but it's based on the underlying, and the weekly is extremely oversold. What do we got on a monthly? After that beautiful pullback, it's getting deeper. And this is a beautiful low to high 618786 retracement. This is why I like it. So as long as we hold that 55 and above, I think we're good to go for a potential breakout. And if we start breaking out, this thing could go to 200. What? That's a triple to get up there. Are you kidding me? Let's see it. But in the interim, hood alone is relatively new, but it still goes further out and we got data for it. So what am I expecting? What would the software look like? We're going to get this big slingshot with mojo back to the upside as this turns over, it turns back up. And we're going to go catapulting up. As my weekly cycles up, it's going to pull the monthly to start engaging up. And I think at least we're going to get a 618786 retracement, which would put us somewhere around that 120 to 130-ish level, which is still basically a double from where we are. And if it gets very bullish and we start breaking out, then we start targeting 160s, 170s, even that 200 up there. And that would roughly be a triple. And again, this is not, well, let me buy options today. In the next 6 months, it's definitely going to be up here. This thing could take longer. But the cards show that this is likely to start grinding higher. And the software is set up for the next several months as my weekly is finishing the cycle, ready for a cycle back up. Okay? All righty. Let's continue. So you have it in MetaTrader 4. We have it in NinjaTrader. I'm thinking about doing it in TradingView and maybe even possibly MetaTrader 5. So we have some new options, hopefully in the future, for us to use it in different platforms, get the same results of high probability trades, low risk, high reward, high probability trades. With my God-given talent to read and interpret price on a chart, combined with the beautiful software, the Magic Fibo, we got it all for you. So tell your friends, tell your neighbors, tell everybody, come join us. We have a lot of fun. And this is looking for a big bounce. Let's continue from black gold with any final questions as we were getting from black gold to go to yellow gold. Let me get back to finish that conversation. So is this going to go breaking out? Is it going to go breaking down? It's a coin toss. We're stuck between support and resistance. So force price to prove it. Whatever I'm trading, whatever direction, in the interim until we break one way or the other, be in a position of authority. This thing could easily go ripping into the 150 or even higher if we get more of this rockets flying. If they end up, that's the end of this thing and the straits are now open and all is good, this thing's going to go plummeting, and it only takes a tweet, right? Just takes a quick little tweet and this thing could go ripping or dipping. So that's why you want to be in a position of authority during these very volatile times and expect volatility, but that's how you make money. All righty, so far, black gold played out exactly like we were looking for, other than getting this dip down here because rockets went flying. And we even set it for the longest Remember how I was looking for this to dip first, then go to that 100 target. But it did it in a matter of a few weeks, really even a couple of days, when the big rocket started blowing up and hitting. We went shooting to the moon to that target. I remember some expressions when I was like, when it gets down in the 50s, 50 and lower, I want to go long because it's going to make a run at 100. We didn't quite get there because rockets went flying. But we warned you that if it does, expect it's going to test that up there. That was what we were looking for. Now that we've got it, we could easily come back down and even come back to these new lows. So what would it take? Iran's agreed to surrender. They're giving over their enriched uranium, and the straits are now open. There's no more risk of any type of get all those allies to come in there with their warships and just be an escort for all the ships going through the strait. And this thing is going to go plummeting. What I don't agree with, now I'm going to digress a minute, but this is my personal feeling. Why is gas going up in the United States? Gas prices are based on, like crude, anything else, supply and demand. The demand is there. That hasn't changed. The supply, well, the Straits of Hormuz, it's shut down. That's global. That's not U.S. Our supply has only increased, not decreased. So the market makers are having tizzy with running our gas prices higher. I think that's wrong, because supply and demand says our supply is not shut down, not even close. Our supply is increased. So Emil, that means our gas prices should still go lower. But what if they shot up? I mean, Costco is just like a few weeks ago, it was like $2.70 for premium, not just regular unleaded, but premium unleaded. And it shot up to $4.35, $4.34.9 in a matter of no time. Why is it doing it? It's not because the gas, our oil production is low. It's higher than it's ever been. We're getting hundreds of millions of barrels from Venezuela. So we got so much crude flowing in the States that it doesn't affect us. So who's doing it? Market makers. They're crooks. There's no reason whatsoever that gas prices should be going higher. That's just the thing the market makers always do during summertime. They know people are going to go driving during summer and the consumption of gas is going to go higher. So what do they always do during summer? Raise prices. But it's the supply and demand curve. The supply has not decreased. It's only increased here in the States. So why is our prices going higher? I digress, but it is a good, valid point. All righty. So is this going to go lower? Yes. Even if it goes to the roof, it's still going to come back down. But this whole bit about the Strait of Hormuz, we get Zippo. I think they said about 1%. Well, with our new drill baby drill and now the new agreement with Venezuela, we got so much oil. It is insane. Prices ought to be $2 a gallon for premium and lower. But no, they got to manipulate price on this as if globally I can understand it. In China and Japan, they get 95 and 90% of their oil through the strait and it's shut down. Sure, their supply is dramatically cut off. But the States doesn't affect us. So why is our gas prices going higher? So I'll leave you with that. Moving on to gold. Yellow gold, my friends, I warned you. Emil, did we not talk about this for months? When gold was the biggest thing going. Gold, got to buy gold. It's going higher. It's going higher. We did that big rip. And what did I warn you? The more parabolic this goes, the more it needs to make a pullback toward that 4,000, 3,700. It's screaming we need to come down and make a new low, because this dramatic drop suggested this grind higher parabolic move. We needed a correction. Screaming it. The software was screaming it. And did we get what we needed? We wicked down into the 4,000. Let's see what the actual low was on this chart, 4,000. Look at that. Can't make that up. Is that the end and we're ready to go blasting off, or we need lower low? I'd like to see even more downside. This looks like the 1, 2, 3, maybe we need a little 4 and we get one more push deeper into the zone where I originally talked about 4,000 to 3,700. Isn't that a thing of beauty? So am I guaranteeing that this is the end and we go breaking out? Well, we got a new lower low. That's all we needed, right? That kind of fits the bill, like ES, NASDAQ, the rest of the story. We got what we needed. That could be it for us to go breaking out, or we can get one more push. When I drill down to a lower time frame, it starts to look like we may need one more push, right? From the original drop, then push, we got what we were looking for. So with the initial rip to your drop your face, then we got the drop. This chopping, overlapping price action, how many times we bring that up in different charts, but the reality was this was likely going to make a lower high and then a lower low. I warned everybody of this rally into this zone. Be careful. This is not ready to go breaking out right now. We really need a lower low to clean this chart up. Now that we have it, this kind of looks like a 1, A, B, C, 2. So let's do the math. If that's the 1, this little correction was the 2. This is impulsive down in 3. This chopping and overlapping looks like a 4, and we may need one more push lower. So not a guarantee on that, but since this low, we're starting to what? Chop and overlap. That's conducive to the 1, 2, 3, 4. And maybe we get a little bit more push, then we go down. So be careful. That don't necessarily mean because we hit the 4,000, we did get a lower low, that this guarantees we're going breaking out. I definitely think we're going higher high eventually. But I'm not convinced that this initial move is over. We probably need one more push. All right. That would clean it up even more to not only give us a lower low, but give us that 5-wave completion move down lower. But I have no problems with nibbling at the 4,000 range because I do think we're going higher, but I still would look for us to make another low. If that's what this is. 1, 2, 3, 4, 5. It's possible it's already over, but maybe we need one more flush. Any questions on that? Silver did not go as low as I had expected, nor I was looking for. It too, sound like a scratch record. We did make a lower low, so theoretically, that's all we need to clean that chart up to warrant the next run. But I'm not convinced. That may not be the end as well. So we go, I was looking for a deeper retracement. And again, yes, we made a lower low, and that's all we need. But I was hoping to get a little bit more like the $50, $40 would have been better. It would have been equal to this initial move. So if that was the initial move, whether you take that one or just the big one there, and we do an equal and opposite move, that puts us down around the 50-40 range. We didn't quite get that. So sometimes you get the A equals C type of move, which would put us more like 44 than this 60 up here. So you can see it's a pretty far cry from equality. But it did, in fact, make a lower low. So this may be the end. And we're ready to go breaking out. But I warned you about gold and silver. When it went parabolic, we were going to need a big retracement. Amen? We were due for a big retracement. And we got what we were looking for. About a 50% retracement. Right at it. What did I say weeks ago when this baby was ripping? Be careful, because we're going to need, the more parabolic this goes, we're going to need at least a 50% retracement. We got it. Can't make this stuff up, Mr. Tucson. But is this the end? Maybe. How do I know we're ready to go breaking out? Well, price would tell you automatically based on that high to this low and that rally point. We break above that level, game on, we're going higher high, right? That's just looking at the chart. But in the short term, we need to see some levels break above a 618 back to the upside. And that upside is going to be this recent high down to this low that puts us about that 84 area. And then if we take just off of the recent high here, we're talking 93.90. So right around that, 79. That's not 93, 79. So right above that 80 area would warrant maybe going higher high. And this one puts us a little bit higher toward that 83 to 90 zone. So up and until we get above, say, $84, that says we'll probably make a run toward 96. We break that, it says we're going to go higher high. In the short term, this is important to watch the high to the low. This is going to be strong resistance on its rally back up. And that is this zone, that 618,786 zone. So from about 89 down to about 83 and change, this is big time resistance. So we'll color code that in the pink version for resistance. I would be careful on any rally into this zone. So if you're just scalping this to the upside, for example, and you think it's ready to go blasting off, it might. But as I get into this 84 to 80, 90 range, 84 to 89, say 90, since it's sitting right there. Anytime price gets in that zone, I would definitely be taking aggressive profits on those short-term bounce. And if we're able to clear the hurdle, then expect we're going higher high. But was this enough? It looks a little shy on the second leg. Got this, we got the retracement. We were looking for a further extension lower before we went higher. And right now, maybe that's the end. Or just like gold, we have the similar type move where this, from the recent 3-wave correction, we have the last 5 wave down. 1, 2, terrible looking 2. Let me curl that, looks a little better. Then we get the impulsive 3. We get the initial 4. So this level up here where that wave 1 bottom is, this wave 4 should not go into that area. So if this is a little wave 4 and we just kind of chop, look for one more push. And then that would make this more equality that we're looking for to set the tone for the big run. So in closing, be careful on this bounce. Be aggressively taking profits. Look for this resistance zone to come in. And if we don't, which is a little bit lower than that, so I actually extend this. Why? Because if this is the wave 1 down, and this is the 1, 2, 3, so that high, this low, 1, little 3-wave correction, 2, impulsive 5 waves of the 3, the third wave here. So again, that's 1, that's 2, this is 3. Wave 4 cannot go into the area of wave 1. And as long as we stay below that and we turn down, look for a new extension pushing us lower. And what are those targets? You use your 3-point tool, high, low, lower, high. Equality would be in this 40-ish range, where that initial move equals the C wave. So A, B, C would be down here in the 40s. And that looks beautiful for this type of as long as we stay below this, what is that number? 78 right there. That swing point low. Let me just measure it and get it for you. That low was 78. So as long as we stay below 78, that low right there, we stay below 78 in this rally, we're likely going to get a push lower low. And I'd start targeting somewhere around that 50 to 40 range we originally talked about. And right dab in the middle is the quality, right around that 45. Amen? What happens if we get to 45 down here? That would be a good time to look for the next big run. Is it possible this is over and we go breaking out? I'll believe it when I see us take this out to warrant extensions, to warrant the next extensions. But in the interim, I'm not convinced that this bounce is over, even though with the lower low, this looks like the 1, the 2, the 3, the 4, we need one more push. Amen? And if we get it, that's a beautiful opportunity for us to buy and look for this thing over the next several years to go ripping higher again. All righty. What about crypto? Bearish, bearish, bearish crypto, but bullish short term. We're grinding, we're grunting, we're just winding this cable up, and we're likely going to push into the maybe 90 to 110 level before we're done. It's possible this could just get gnarly and chop and grind, but remember, I'll close here, that this 60,000 low is not the end. It's time to buy when we hit 50,000 to 30,000 zone. So once it hits 50, I'll start nibbling. It gets to 40, I'm going to buy more. It gets down to 30. That's just incredible opportunity to just load up at that 30,000 range, because I expect we're going to go blasting off 2028 halving, 12 to 18 months post halving into late 2020, fall of 2029. Just like we've been doing on Bitcoin since its inception. You go out to the higher time frames. I got my lines on here showing halvings. And every time you get to crypto halving, it rips 12 to 18 months. It pulls back in crypto winter. You get the next low, which is the green line. Then you start climbing higher into the halving. 12 to 18 months later, you go ripping. You get crypto winter low, you go into the halving, 12 to 18 month run, you get a pullback. And this most recent one in 2022, what did we say? It's a crime for you not to buy Bitcoin below 20,000. You'll regret not buying Bitcoin below 20,000. It's a steal of a deal. We expected to go towards 150. We got to 125 and change, 126, whatever that was, 126.3. We didn't quite reach the 150, but hey, 20,000 to 120, I'll take it every day. And this is going down next, so it's a cycle. 12 to 18 month run post halving. A year later, you're at a crypto winter low. Then you look for the climb into the next halving, 12 to 18 month run, rinse and repeat, rinse and repeat, rinse and repeat. So anytime at 50,000 and lower, you start to nibble. The more it pushes 30,000, the more you load up. And you be patient while you're buying it down here at that 50 to 30 zone, because it's going to start to chop and grind in here to the next halving of 2028. And then it's going to go ballistic 12 to 18 months post halving, which would put us into fall of 2029. And just notice as I close, we had the same thing. We topped out in 17, in 21, in 25. So when's the next one after we get down here? We're going to top out in 2029. We bottomed over here in 18, 14, etc. And then over here in 22. So when are we bottoming? This year in 2026. That's just a rinse and repeat type of move. So whenever we get to 50,000, perfect time to nibble. We get pushing closer to 30, nibble real, go to a smorgasbord, all you can eat, and then set up and hold it till late 2029. That's how you make money in this environment. in the crypto arena. You buy low, you sell high. When do we buy low? When I tell you so, right? Nope. I can't tell you when to buy it. I'm just telling you technically when we get 50,000 and lower, that's what we had here and what happened. Boom. 12 to 18 months post halving, that baby went ripping. It's going to do it again, like it's done every other halving. And on these older ones, it doesn't look like much, but if you stretch out your chart, it went up thousands of percent. It was a huge move, even though it doesn't look like much here. Kind of see something there, bigger here, bigger there. Well, the next one's going to be even bigger, right? We're going into the upper 100, 200,000 range is the plan. Even when we get down here, 50 to 30,000 range, we're still going into the, say, 2,000, 200,000-ish range is the plan. So there you have it. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor, and join us again tomorrow. That's it. That's all.